Good morning. Paul Georgie from Allendale. It's July 25th, Thursday morning, and grain market's under pressure again this morning, and most of it is focused on the liquidation in the August meal. Down limit yesterday, and synthetics yesterday were suggesting another limit down, which we opened limit down, another $20 lower in the August meal, and synthetic calculations this morning are suggesting another $20 lower than where we're at this morning. So that weakness, that liquidation, is causing pressure in the total grain complex, led by the soybeans. We're seeing pressure in the new crop beans as well, the corn, liquidation in the bull spreads, where people are getting out of the long positions that they had in the nearby contracts, and also getting out of the short positions that they had in the deferred contracts. That pressure continues, and there's really no way of telling when it might stop. It seems to be in full momentum to the downside at this point in time. The concern, or the anticipation, is that we will see some buying come in to the U.S. Because of cheaper prices. However, yesterday we seen our regular buyer, which has been South Korea, normally buys from us. Taiwan usually buys from us. They went elsewhere to South America. Announced overnight there was a South Korean purchase of 60,000 tons of corn, went to the Black Sea region instead of to the U.S. So our concern here at Allendale, that we continue to keep monitoring, is how will we improve exports, and the bottom line is cheaper prices might help create some export business. So we're monitoring that very closely. Basis in the cash trade continues to slide. Soybean basis continues to slide as processors have shut down some of their plants for maintenance. Others have shut down because they've met their needs for a period of time. The belief is there still will be a gap in between the old crop and new crop, and expect that to hit later on here in August, maybe in early September, before new crop is harvested. In the corn, basis is falling simply because of pressure in the soybeans. But also we're seeing some ethanol plants back off their basis considerably yesterday, as crude oil prices under pressure yesterday, and we're down about another $1 a barrel in crude here this morning. So the profitability for ethanol production continues to wane. The outside markets not giving us any help here today as well. More of a risk-off attitude there, with gold, precious metals under some pressure, crude oil down, and the dollar a bit stronger. In the livestock trade, we are seeing a brighter spot there, that we're finally seeing some strength in the cutout value of beef. Choice was up 55 cents yesterday, Select up 72 cents. The cash cattle did trade at 119 on some cattle in Kansas yesterday. Packers still are not showing their hand as far as coming out bidding for cattle. The cutout values have not shown them enough excitement yet. The demand is still sluggish at the retail counter. Pork cutout values yesterday were down 134, and we expect to see some pressure in the cash hog market, and pork processors have now went from a black margin to a red margin here in a short period of time. So a lot of things happening here today. We do have weekly export sales out here in a few minutes. Stay in contact with your Allendale representative. We can get that information to you, or just check in on the website. We'll have it updated here shortly after the report. So we wish everybody a very successful trading day, and I'll talk to you tomorrow morning.